The last remarks will correspond to Mr. Anthony Hobley. Please, I invite you to speak on behalf on the Carbon Tracker Initiative to speak.
Thank you, Mr. President, and distinguished ladies and gentlemen. Carbon Tracker apply rigorous financial analysis to climate risk, literally reframing the debate. Through our work, we are identifying ways to align energy, economic and climate goals through a greater understanding of the real value and risks associated with fossil fuel investments. Our analysis helps to build the case to reduce risks to economic stability by taking the opportunity to reallocate capital to clean energy. We know we can't burn all our fossil fuel resources and stay within the 2 degrees budget, or even 3 or 4 degrees for that matter. That is the science, those are the numbers, the so-called carbon bubble. We recognise hydrocarbons won't be turned off overnight. We want to work with the energy sector and the financial institutions speaking here today to develop the right financial tools and solutions to reduce risk and transition our energy system. Economies not only face the growing costs of climate impacts, but also increasingly expensive and financially risky energy. Objective financial analysis, applied to public and private sector investments, can help target investments that deliver climate and financial stability. Many high-cost projects are also high carbon and represent financial risk now. Even with a low to zero carbon price, they demand a high oil price simply not to lose money. This has put over $1 trillion of capital at risk, the dirty trillion. In a world addressing climate change, the financial risks rise dramatically. Yet, plans are there to spend over $20 trillion developing these high-cost projects, as well as searching for yet more unburnable carbon to replace these reserves. This potentially wasted capital exists because the market lacks the transparency to correctly price climate risk and real costs. We've termed this the fossil fuel risk premium. Clean technology costs are falling, and capital costs for fossil fuels are rising and requiring ever higher energy prices to sustain them. Capital could be diverted now to develop clean, secure and affordable energy sources, accelerating the development of lower cost clean energy. And there is demand. Investor groups are calling for the clean trillion, as recommended by the IEA. Business as usual is not enough to make this happen. Our offer is for our analysis to support a dialogue on how to identify and mitigate these risks. Accurately and transparently valuing fossil fuel investments, helping to level the playing field for sensible allocation of capital in order to support the transition to the low-carbon economy. Focusing policymakers and financial regulators on the double jeopardy risk of high-cost, high-carbon developments. We recommend that financial regulators convene in an advisory body to assess these risks. We are hosting just such a meeting tomorrow to kick this off at the New York Stock Exchange. Thank you to the Secretary General and the UN team for all your efforts.
Muchas gracias, señor.
I thank Mr. Hobley for your presentation. With these remarks, we will conclude this panel. Private markets provide leadership opportunities for greening investment and yield net mitigation and adaptation benefits. I am very grateful for your participation and the commitment laid down by the private sector. It clearly reflects that there is more co-responsibility to have joint investments that can open up to the participation of the public sector. The next panel is how public leadership and smart policies can lead the way. We will now immediately move into the second panel, which be chaired by Her Excellency President Park Yoon-jae from the Republic